everybody to the first panel, and we're looking at innovation from a corporate perspective. So we have really the heavy hitter here with me, so I'm very proud to have these caliber on stage. The mic is switching out and in. My name is Seip. I'm an associate partner at McKinsey, leading digital McKinsey in Thailand, and we're part of the Southeast Asia complex. Most of my work, what I did at McKinsey is serving insurance players and banks on digital topics, and before that also technology topics. So anywhere from redefining customer journeys to the enterprise architecture that is required to do that. And with me I have 5 speakers, and I'll introduce them one by one. So I'll first start from here. We have Zaman, who is the Chief Innovation Officer of Metlife Asia. He heads up innovation for whole of Asia and is part of the Asia leadership group of Metlife. Before his work in insurance, worked here in Singapore in Singtel, various roles, also Chief Strategy Officer, and held numerous leadership positions at tech companies before that in the States. Just a selection: LG, Gartner, Fast, a search engine acquired by Microsoft for 1.2 billion, and Sun Microsystems. So thank you very much, Zia, for coming here. Next, we have Alex Kimura here, who is the Chief Strategy Officer of Aviva Asia. And in this role as Chief Strategy Officer, Alex oversees strategy, corporate development, mergers and acquisitions. This may be important for the startups here. Digital analytics and the transformations in Asia, and is doing that since 2014. But before that, he has extensive experience in financial services, from leadership positions in AXA, where he reported to the group CEO, and also as a consultant at Bain. And before that, started as in investment banking at Morgan Stanley. So thank you very much, Alex, for coming here. Up next is Cheong who is the CIO, so Chief Information Officer of Tokio Marine Life Insurance, here based in Singapore. And as a CIO, Cheong leads all aspects of the company's technology, including implementing the IT strategy, but also the technology risk management framework in there, and has over 18 years of IT experience at various companies. A selection of that worked as a CIO also for an insurer in Hong Kong and Malaysia, and recently set up a new insurance operations in Vietnam. Next to Cheong, we have DJ De VA, who is the CIO of AXA Singapore, both Life and GI. He worked in insurance and at AXA since 2009, also in a regional role, overlooking setting up the regional target operating model of the AXA GI services. And before that, in banking and IT consulting, also amongst others in enterprise architecture, and started his career as an army officer, I imagine in South Africa. And to round off the panel today, we have Ryan Fox joining us, who is an AVP and Head of Emerging Delivery and Platforms in the Lab of Forward Thinking, also known as LOFT, by Manulife. And he's a founding member of LOFT in North America, so it started in Toronto, and there was also a lab in Boston, and now branching out in Singapore, and led the extension to Singapore, and has over 7 years of experience at Manulife, focusing actually at accelerating emerging solutions for customers. So thank you very much, Ryan, for coming here. Let's start with a first overview question before we dive into the details. Why are you actually here, and what is the value of InsurTech for you? And maybe Zia, can I ask you to start?
Alex and I were just joking, why are all of you here? There's a better debate happening somewhere over there, and you all should be watching it rather than watching Aviva versus Metlife. Listen, we're here because we're all interested in seeing this industry wake up. Wake up and become more focused on the customer. Wake up and think about how it can serve its customers and add value sooner. Wake up to realize that it's not about the check in the life insurance industry. It's about the true job to be done for our customers, and that is, how do you allow them to live a longer, happier, thicker, fuller life? And all of us up here on stage believe that it's not about competition. It's not even about disruption. It's about collaboration. And it's going to take some time, unfortunately, before we get the right combinations of a little bit of enabling technology, but the tech is already there, let's face it. The will from us as insurance companies and the magic that's going to turn some of these solutions into something that's going to drive true value. So we're here because we're concerned. We want to make things happen in the interests of our customer to deliver value to them because this is a noble industry and we're not going to do this on our own. So we were looking forward to partnering with all of you.
Just to add, I mean, it's all about customer experience, and that's one of the things that we're working hard every day to do. But obviously, we can't build it in-house on our own. And one of the things that we need to look with all of you is how do we partner, build capabilities, plug in capabilities that we can collaborate, as Z mentioned, because frankly, I don't think we have the capabilities in an industry to build these kind of capabilities, neither the speed. So I think it's a win-win situation to collaborate.
I'll probably try to put this into a very simple analogy. I was talking to DJ earlier a little bit on FinTech, InsurTech. I think we build it as a very simple analogy to a barking fierce dog, right? It's a barking fierce dog that keeps reminding us that there's a threat that is coming, right? And a barking fierce dog that you can be very friendly, and if you know how to embrace it and be friendly, it can help you a lot as a friend. Yeah, it's a simple analogy.
I think it's a very, very exciting time for all of us to be here. I mean, one of the oldest industries in the world, very traditional industry. We heard Vladislav explain some of the perceptions of the insurance industry today. I think it's a once, maybe twice in a career opportunity for people like us to have the opportunity to actually rethink how that industry works. And I think the thing that's very exciting about InsurTech is we can not only use it to do better the way we do insurance today, but particularly working together, finding those little corners of value that we don't have access to today. And that's going to be better for everybody. Thank you.
Yeah, I don't know if I have much more to add to those great responses, but it really is about partnership in not only being a consumer of a service, but helping build it with someone, right? So a lot of times the corporates will see it as, well, we'll let the startups figure it out and then we'll consume it or buy it later. But to us, it's really about how do we get in on the ground floor with them? How do we build something alongside them, help them understand what our customers are saying, and give them access to resources that they may not otherwise have access to as we access and partner with those startups as well.
Yeah, thank you. And I hear a lot about looking at partnerships, waking up to the opportunity that's already there and capturing value for customers that might not be easy to capture in let's say, the old way of doing business. And we see different companies and insurance companies, but also to the analogy with FinTech banks approaching it differently, right? From we're not the experts in here, we let everybody here in the room do it and we'll just buy the winners, to we need to completely retool our whole engine from the ground up and become a Google of insurance, to things between there with labs and innovation. How do you look at how to approach InsurTech and how to partner with it, and what role do you see for your company and role for the ecosystem? Who wants to start with that? Yeah, because
Thanks. I think with anything, it takes a portfolio approach. So we believe that you need an innovation portfolio. It's going to take some hard, heavy lifting to drag this industry into the 21st century. And that is the hard work of just taking a look at the way we do business and changing it from the inside out. It's going to take a little bit of work trying to think about how do we bring some level of digital to the business, using partners, using customer experience platforms, potentially looking at fundamentally new types of products and services. And it will take some disruption and building on your own. Anyone who says, I'm just going to let you versus them, misses the boat. It requires co-creation and always putting the customer in mind. But yeah, it does require, Harry, a portfolio. Some of it's work that you have to do on your own. Some of it's disruption you do with partners, and some of it's just simply insourcing good technology. But I haven't yet seen a single startup that can work without the aid of a larger insurer. Nor do I think that any of us really could do it without a little bit more work and help from the outside.
If I can maybe add something onto that, I think Zia covered a lot of the points. I totally agree with the portfolio approach. I don't think we can do, A or B. I think we need to do a mix of things. The partnership approach is very important because fundamentally what we're working towards is a cultural transformation, and we need to infuse that culture. We need to go outside and get some good ideas. We need to work with people that we can learn from about how to do things differently and how to look at the way we look at things a certain way. We've been looking at certain things that way for 20, 30, 40 years. What we need is a fresh pair of eyes. And I think in reverse, working together with partners, sometimes they also better understand some of the challenges that you're facing. I think a big challenge for insurers is, we obviously very interested in the opportunities in the technology, but we always need to think about how does that impact the existing business, the existing distributors, existing customers. So bringing two minds together, I think really helps address that issue. And then the other thing also, setting up labs. You'd asked about labs, Harry. I think that's very important. We need different kind of labs. I think we've been fortunate enough where at group level there's been a big investment in various types of labs in different parts of the world. And as a business based in Singapore, it makes it very easy for us to tap into some of those capabilities.
So at scale, indeed.
I think aligning to what Sia has mentioned and DJ has mentioned, the portfolio approach, it's a good approach because one of the challenges that we all often face in an insurance company, it's to just convince the day-to-day BAU business to just embrace the innovations. We always need to get back to them and remind ourselves that innovation is not just about technology, it's about embracing the business change, that there's a need for a change in mindset in the business level as well. So this...
Yeah, so it's the transformation or the cultural transformation. Ryan, maybe as you're leading Loft, which is one of those labs, could you tell a bit about how you approach that at Manulife?
Sure. So, I think the portfolio approach is absolutely the right way to go, but one of the risks is that the pieces of the portfolio become disjointed, and so that when you start to see success somewhere and you want to be able to scale it up, moving it around within the organization can be quite difficult. And that's one of the things going into developing Loft that we were thinking closely about is, okay, we're designing this lab to be quick, to ignore the past of the company, to not worry about the scale side of things, but to just quickly iterate through things. Now what happens when we think we have a home run and we want to scale it up, and the real value of a lab comes into its ability to plug back in to the distribution of the overall firm. And so we've spent a lot of time looking at how does that change within the firm? And how do we change the way that we approach technology, not necessarily in the foundational space of accounting systems, but those things that have come out of the lab that we now want to scale, that we want to take to hundreds of thousands or millions of customers. How do we do that in a partnership between the labs and the core business? And that's a transformative experience as well for employees to go through, because they see a bit of labs in their own world. And so labs are a great way to get started and to kind of throw something out, act separate for a bit, isolate yourselves, to get off the ground and to get your footing. But as soon as we had that foundation, that the first thing we did was started to build that bridge back and build the bridge how we wanted to build it. Because otherwise, the corporate builds it to you, and it's lined with legal and compliance reviews and all those things that...
Texas, as I heard. Yeah, Alex, please.
Yeah, so just... I agree with the portfolio approach, but even like a little bit big picture, I think as an industry, we do a terrible job from a PR perspective in terms of the value that we bring to the table. And I don't mean just value to the customer, but also how much value we can generate as a company. And if you look at the valuations today, Aviva is one example, but if we compare that to Uber or some of the unicorns, some of these companies are 7x in terms of value per customer. And I just wonder, why is that? Are we doing a good job explaining how much value we can generate? We have so much more data than they do. And why can't we generate that value? It's pretty awful. So, one of my roles as a sort of protecting the shareholders, how can we generate more value? How can we explain that value better to the external world? And I just think that, and I speak on behalf of all insurance companies, we're not very good at explaining value.
That's an interesting point, and to stay with you for a bit, Alex. You're also looking across M&A, right? And might be looking at InsurTech companies now or in the future. How do you value them, and what is the value for an Aviva or for Manulife or for an AXA there? Is it user growth? Is it the technology? Are you looking more to acqui-hire? How do you approach this as valuing InsurTech companies?
I mean, it's back to the fundamentals around how much value you can extract per customer, right? Whether it's InsurTech, whether it's bank assurance, whether it's partnerships, how much can you extract per customer from a deal? That's the metric people should be focused on. And if InsurTech can increase that value per customer, it's a great partnership. If not, can't really work with those kind of people. So it's really about, I mean, it sounds boring, but it's really about bringing more shareholder returns, bringing value to customer, explaining as a firm how much value we're able to generate. Aviva has 34 million customers worldwide, but our market cap doesn't reflect any of that. So what's the problem? So that's one of the challenges for us. So a lot of this innovation and so forth is great, but also, overarching that is how can we increase that communication?
Thank you. And it brings us maybe to broaden the challenges you face, right, in capturing the value from InsurTech or innovating in a broader sense. And if we look specifically to Asia Pacific region, what are some of the key challenges you run into when you're trying to transform the company, trying to innovate, trying to capture this value that InsurTech can represent? I think. Yeah, DJ.
I'll take a shot at that. I think one of the first things when we've got colleagues coming over to Asia from Europe or from the US, they have certain ideas in mind, and after 3 months, usually once they've gone around the region a little bit, one of the first things people remark is, "Wow, Asia is so diverse, so many different markets, so many different regulators, so technology." Culturally, geographically, socially, it's a very diverse market. There's more, I think, more homogeneity in the European states and in the US states. So the way to run an operation in Asia is different from how it gets run in Europe or the US. So I think that's definitely a challenge all of us face. There's always a level of tweaking and customization if we're taking something from country A to country B. I think another challenge is, particularly on the insurance technology side, back ends. I think in Asia, generally, a lot of the insurers are using slightly outdated back-end technology. There are newer technologies available in use in Europe and the US. They're priced higher, and I think a lot of insurers haven't taken that big step to go and do that back-end refresh. And that's just a bit more of a challenge we need to deal with, particularly now with digitization, APIs, ecosystem approaches. There's a few more hoops we need to jump through on the technology side.
So regional differences, localizing it, and technology refreshes. Any other thoughts on challenges you encounter as you try to move the company forward?
Yeah, I think besides what DJ has mentioned, I would probably start with how blessed we are in Asia, because we have a regulator who is very supportive, giving us sandboxes for us to explore in FinTech. Nevertheless, I think that there are challenges in this area as well, because as we are embracing the fast pace of technology, we also need to think one step further and think of what if the technology is successful, we need to bring it back to operation, right? That is where the balancing of technology risk, regulators need for us to make sure that the risk is managed. It comes into place where we need to be, spending a little bit more time after the successful innovation pilots. Those are some of the challenges.
Okay, so yeah.
What I was just thinking, we stopped talking about the customer all of a sudden. I think we should bring it back. Because Asia, it's all about the customer. It's not about us. It's not about tech. emerging Asia has the opportunity to potentially show us new business models based on Jugaad innovation, things like Bima or other technology enabled platforms that work from the bottom up.
And you mentioned Jugaad innovation by constraints, by not having
innovation by constraints,
unlimited budgets,
with under severe cost constraints, forces you to think differently about how to serve different segments of the emerging Asian population. These are problems that if you solve them in Bombay, you can bring them to Buenos Aires, you can bring them elsewhere. But the principle, I think, that our industry does is, that's microinsurance, not interested right now. Microinsurance is not about serving the less affluent. Microinsurance is about how do you deliver more a la carte, smaller bite-size bits of insurance, and I think that's something that we miss. So the first part is emerging Asia is going to teach us a lot for the rest of the world, and we believe that innovating in Asia for Asia is the right thing to do. In fact, we don't have an innovation center anywhere in the world except here in Singapore, even though we're a New York-based company. I think the second point is in North Asia, we have the benefit of working with economies where people are living a significantly longer time. Longevity is increasing, challenging us to think about the individual beyond their working years, and potentially with more science that's coming online, radical longevity, and what impact that will have on family structure and on the life insurance industry as a whole. So if you bring it back to the customer, we'll learn a lot from emerging Asia, the constraints associated with what it takes to serve a much larger percentage of people who live differently than in the West. And then secondly, in North Asia, we've got a great opportunity to really redefine what value we deliver over the course of 120 person's life.
And what are some of these? So you say it's not only challenges; there are also a lot of opportunities. But you got to focus on the customer. Start customer back first. I think that's something that resonates with a lot of the InsurTech companies in here, right? Where I've seen a lot of them indeed put the customer central. Where do you see where InsurTechs can really help overcome these challenges, specifically in Asia? And then, like, what would be your wish list? If there just was an InsurTech that took care of distribution for me in remote islands or whatever it is. I think, Alex, maybe if you share your thoughts on that.
I mean, there's so many, but
the top 3 list will do.
No, I mean, I think the real focus for collaboration partnership is where are the pain points for the insurance companies. So that's one bucket, and where are the pain points for the customer? And if you can really align those two, you really have a good sweet spot with working with all of us. So I think that's really the focus should be.
And what are some of the pain points for you?
Oh, there's so many, but I mean, for example, authentication, payments. I think those are sort of the pain points that we feel
like the
across all of our markets. And authentication is a very arduous process for most of our markets. So if that can be streamlined, done in a very slick way, I think that's a very big pain point that we would solve together.
Okay. And Ryan, maybe without lifting too much out of your loft, what are kind of the pain points that are up on the post-it wall?
Yeah, I mean, I think the back end stuff definitely is what's holding insurance companies back from doing these smaller pieces that are more a la carte, right? I think it's easy to say we want to do microinsurance, and there's a lot of possibility up there, but the back end is hard. And Manulife has done some of that. We actually sell some single day insurance policies in China right now on WeChat, which is quite interesting, and we're watching that closely of what can you lift of that into other markets. And there's a lot of nuanced things about WeChat and the wallet there, but I think that the payment space will change a lot of this. The WeChat wallet definitely opens up a lot of possibilities for us. And as that kind of digital payments moves around the region, that will open up a lot of new opportunities. So I'm interested to see that evolve. But yeah, I mean, there's a lot of things, and I think it is about the customer, but it's also about building the technology capabilities, knowing how to use deep learning and how to apply it and how to leverage it, and we do a lot of that through partnering with startups as well. So sometimes it may be more technology-focused companies that have an interest in the insurance space, and we can work together on that.
Okay. Sia, please.
To be practical, I'll give the InsurTechs three things. The first is genomics. I'm talking deep InsurTech. What are we going to do to fundamentally add new sources of data to underwriting? And genomics, I think, will change our actuarial models forever. The second is customer experience platforms. On average, 1 to 2 times per year is the average life insurer's number of contact points with the customer. That's just not enough. Anything that scales that by a factor of about 100 to 1,000 is what we need, and to have a stronger and richer dialogue. And then the third, I will go back to, I won't use the word distribution, but just simply how do we come up with new ways of reaching to deliver that first experience through financial inclusion to a variety of different people. And sometimes it is tech. In our one of our experiments that we're running, we're using augmented reality, virtual reality, live right now to change the way in a particular low-income market to change the experience.
Okay. And how can you tell me a bit more how you use that?
No, I can't.
So we have to go to that particular market. Yes, DJ.
Can I just tack on to something that Zia said there? So I think there's not one model in the future that's going to be how insurance is distributed. There's a lot of focus on peer-to-peer now because it's new. And I like what we saw on the slide earlier about going back to the original idea of mutualization. But peer-to-peer is not the only model of the future. And I think there's in any business, there's a particular segment of customers that are looking for certain types of products at a certain time and a place. And there's a different set of customers that want different products at a different time and a place. So where InsurTechs can really help the insurers is, I think, all the insurers have very big, very deep established distribution businesses today. There's this misperception that digitalization is the same as a direct, and that's absolutely not the case. Digitalization is a way of us doing better business across all of those distribution channels. I think there are going to be InsurTechs that focus on one particular type of distribution and are wildly successful at that. But if you really want to scale, think about how what you're doing can actually work across different types of distribution models. What Zia said about the microinsurance, I absolutely agree with that. Trying to get bite-sized piece of insurance cover and plug that into somebody's day. I think that's, and you'll have different customer segments, different types of risk, different things that they're doing during the day, but that's the total landscape of insurance distribution that we're looking at for the future. And InsurTech gives us the opportunity to get the right size of insurance to all of those different people, no matter what they're doing during their day.
Thank you for sharing these different areas. I think one of the stated purposes of the InsurTech conference, right, and InsurTech as an organization, is to foster an ecosystem where these partnerships, what we talked about, really happen and blossom and learn from each other. Would you maybe share a bit of what you hope to learn from startups, or what startups can teach the big guys here on stage?
I'll probably start. Very simple. I think we can learn from startups to embrace failure. I think innovations, if we don't fail, we don't learn.
So the mindset.
I think something that's very refreshing is the greenfield thinking. So just coming in with a completely new set of eyes and saying, why does it work this way? Because there's always, when you're talking to the people that have always worked in insurance, it's that way because it's always been that way. It's been like that for 10 or 20 years. Why are you even asking the question? So I think that greenfield mindset is a very valuable learning, and that's part of that cultural infusion I spoke about earlier. And then the other thing that we definitely need to learn better is, I don't think there's an InsurTech startup in the room that's got an idea and thinks, right, how am I going to run this with 1,000 people? They think, how can I run this with 3 people? Or how can I run this with 5 people? We've got a little bit more than 1,000 people mentality today, so that automotive scalability is from the beginning, designing stuff to be scalable and automated is stuff that we can definitely learn a lot better.
Definitely culture is the most important thing that we all do. And changing the mindset over the next decade is really the principal goal of any innovation team or a chief innovation officer. I was speaking with Beth Comstock, who's a friend of mine vice chair of GE, and she basically said, "See, if you're really going to focus on one thing, always let it be culture." And I'm smiling because I was looking at the charts earlier today, and I was thinking maybe 2 years from now we're going to have an InsurTech event here, and instead of us, there will be InsurTech CEOs who've been acquired and are going to tell their story about how challenging it was either to create value or to change culture, and I just can't wait for that day. But I will differ a little from my friend Alex here in that in looking at the InsurTech companies, I think we need to learn the lesson of, yes, it is the value delivered to the customer, but it is also the value you have in terms of changing culture that matters. And BlackRock's a great example. They acquired a 40-person team. Their culture has changed forever. A little bit of the paint has rubbed off on both sides of on both cars, and that's going to be a real catalyst for change at all of our companies when we have meaningful InsurTech bets and a portfolio of bets that changes our culture and our DNA.
Yeah, no, interesting this rubbing the paint off each other. So it's actually a two-way street, right? So there's also things that maybe startups can learn from established players who had to deal with insurance for hundreds of years. What are some of those lessons you would want to share with the InsurTech? So don't leave or don't forget the greenfield thinking, right? So, but what can you learn from that?
I mean, just to add to what Z was saying, I think we have a lot of entrepreneurs in our Aviva Digital Garage, and what I find very refreshing and very interesting is, I mean, they're very focused on a very singular task, a very singular project, whereas people in the corporate world tend to try to do multitasking and try to do multi things and end up not doing things very well. So I think it's the lessons learned for us to really look at in bite-sized pieces, 90-day pieces or 60-day pieces or 30-day pieces, delivering on and focusing on very narrow tasks. That we don't do well, and I think that's what we can really learn on from an execution point of view.
So there's this iterations, MVPs, kind of putting something out there that works, but on a focused area.
Focused, but also, a lot of the entrepreneurs are very focused on burn rate too, so they really know how much they're spending every minute, every day, whereas people in the corporate world don't even think about burn rates, right? So there's a different mentality to how to spend time and how to spend money.
Thanks. We talked about culture, we talked about greenfield thinking. That's a lot of things that might not be in your average 59-year-old insurance employee. So it's also about getting the right talent, right? Getting these entrepreneurs, getting the right people to help you transform that culture. Part of it is learning, but part of it's also importing that DNA. Could you talk a bit about how you look at that? Because if, let's say we just graduated from MIT or Stanford, and I could start an InsurTech startup or join a fast-growing one, or I can join AXA or Manulife or Metlife. How would you approach this kind of talent? And is that actually the talent you're looking for? Or are you looking for a different type of talent? Maybe, Ryan, if you are looking to recruit for the loft, how do you guys look at that?
Sure. So, I mean, from my perspective, you can go the startup route, and there's a lot of benefits to that. But you could also come to a corporate that wants to iterate quickly, try new things, experiment, and has access to millions of customers to be able to test with. And that getting to the first 1,000 customers for a startup is difficult. Getting to the next 10,000 is even harder. And so at a corporate, if we've been able to structure well, then and been able to give them access to experiment with live customers in production and see how things work, they're going to get to their ideas in front of a customer much faster. And someone that is a creator that likes to create things, they like to see the things they create in front of customers. And so if we retool ourselves to make it so they can get it in front of more customers faster, they should want to come work for us. And so that's a lot of what we've talked about is what are we doing to support them and their ideas? And it's not about joining us and then coming to work on our ideas. It's bring your ideas and come work with us and work on our payroll, because then we can give you access to things that would take you years to build.
So it's the access to scale as a promise from, if you have something cool, we have millions of customers that are dying to try that. Okay. Other?
I think the same as there's always a war for customers in business. I think we all know there's a war for talent. So the same way that we're working really hard to go out there and get customers, we're also working hard to go out there and get talent. I think if I look in the old days, it was good enough for a big company to wait, and there'd be people coming to apply. And these days, that's not good enough anymore. You need to go out and find the people you're looking for. We've I think in the old days had I'd say very traditional job descriptions, insurance job descriptions, and we're hiring people with 5 years, 7 years, 10 years of specific insurance experience, which is also changing. We're looking for people now who've got potential, come from other industries, bringing those fresh eyes. We're definitely adjusting hiring policies, looking at diversity, gender diversity, age diversity, experience diversity, etc. So we want a real mix of people working there. And then we have to have I think some of the other topics the other guys have mentioned, you need to empower people and have teams, and I think the short, sharp focus, but also make a fun working environment. So give people sort of the mission, give them the tools, and then let them rip. It's okay to make a mistake, but just come back, show that you've learned something from it. And I think so. Being out there, being visible, finding people, and making things fun.
Yeah, to keep them also, right? And maybe that's an added dimension is one is getting them in, but second is preventing that after 6 months they run out away because there are a lot of policies and processes and still the old DNA that they have to deal with also. How do you prevent that happening?
Harry, I thought where you were going with that question is somewhere else. 59-year-old agent, well, where we think about talent is how do we replace that with a 59-day-old bot? So in the future, if you're really looking for...
No more people.
No, if you're looking for ways in which we can increase leverage and scale and handle some of the front end, I think that there's a lot of value in machine learning and putting a bot interface at the front end of our solution. And doesn't necessarily have to be human. I think we've got this myth that in Asia, around the world, that it has to be human to sell financial services. 41% of US e-commerce has got no humans associated with it. There are far more complex products than ours being sold online and on digital. We do not need humans to sell, but maybe to act more as actual advisors and coaches. But certainly the front end is going to change to be very automated in the future.
So you'll see a disruption in the front end that maybe take away some parts, but do you also see new jobs being created for just to make the bots or to be an advisor? How do you see that? Or is it a bit more bleak for the agents of tomorrow?
Well, I think in the broader economy, I think what we would all tell our children is be a maker of bots. There's going to be still humans at the back end figuring out what the bots should learn. But it's not about bleak. I think we think it's a good thing when there's automation, so we can go back to doing the things that actually humans like to do to deliver value. This goes way beyond insurance at this point, but fundamentally, machine learning and AI frees us humans to do what we want to do. I tell a silly story about Bali. We've all been to Bali, and we see the beautiful art and the architecture, and why is because 50% of the time people in Bali did what they wanted to do because the land was fertile and the land worked. Let's revert back to doing what makes us human, and it isn't in explaining a complex insurance policy.
That's interesting thoughts. We might go on later on how we sell insurance to those people. So maybe Cheong, if you want to
just a little bit on
build
top
on this
of
or on the talent.
Just a little bit on top of what Sias has just mentioned, what the next generation of what people are interested to do and they do well. I think it gives us the idea of a little bit shift in how we acquire talent, because also like what DJ has mentioned, the normal way of how we get JDs or ready, get CVs, and then we get them to fill application forms and we interview. Those probably are the process that we need to think of changing if we need to look at innovation.
Okay. Let's tack to another topic, and I think it was mentioned earlier by DJ that in Asia it's a very diverse region, right? There are different markets and different stages of maturities, and specifically also the regulatory frameworks are quite different. If you would look at Singapore, for instance, versus Thailand is already a prime example of that. And if we go to North Asia with China, it's again very different. What can the regulator do, as if it's part also of this ecosystem where we not only have startups and companies, insurance companies, but also, of course, the regulator who should be part of that conversation. What can the regulator do, or what would you wish for regulators to do? And without naming names, maybe give examples of regulators that are thinking in the right way or maybe inhibiting this growth. Because insurance is still a very regulated industry for several good reasons also.
I do. So I've been in Singapore for 6 years. I think when I first moved here, things were still very tough on the risk and compliance side. But if I look at the changes and the advancements in particular the last 2 years, I think there's a very clear line being set by the regulator here in Singapore, and some of the stuff there I think would be very valuable for other countries to look at as well. Firstly, there's a very clear tone and expectation set around privacy and security. That obviously there's a lot of work that needs to be done on the back end of that, but I think everyone's very clear where we stand in terms of what the expectations are. I think there's other countries around the region which don't really yet have that same expectation as clearly set. So that gives a lot of confidence in businesses, investors, and consumers as well about how safe they're going to be and their data is going to be. And then I think if I look at some of the stuff that's going on in Singapore, I think the sandboxes are a very good move, because it encourages innovation without being shackled down by risk and compliance, which is what we had seen happening maybe 2 or 3 years ago. Some stuff wasn't happening fast enough because there were too many compliance things to do first. So the sandboxes are a good idea. I think there's a number of industry work groups as well that we're involved in, a number of different banks, insurers, together with the regulator, working on various topics. So I think the regulator's got an ear out for what are the pressing issues in the industry, and then setting up work groups around that to with industry develop guidelines. So that's a very encouraging thing. And then also I think the Singapore government setting the example with the online data, data.gov.sg, I think is a very forward-thinking initiative, and also expecting financial institutions to be a lot more clear and they're encouraging and pushing API development to encourage the development of an API ecosystem. So I think that there's maybe 4 or 5 things in there that are happening here in Singapore, which I think are helping. 25% of my job is security, and all of those things are actually making my job a lot easier to do all of the digital and innovation stuff, and still deal with security and compliance.
So putting the right ground rules that everybody has to abide by. Alex, as you're looking at the whole Asia, right? Do you see differences, and how do you cope with that as Aviva? Because you're actually a global company, right? Looking at regulatory frameworks from UK to China. What are your thoughts on that?
No, again, I mean, it's different every market, and I think Singapore does a wonderful job of trying to innovate and try to bring new innovation, new ideas. And I like the way they work with each of the insurers and open up an open dialogue to make that happen. Don't really find that with other regulators. So, but I think it's going to happen. I know Hong Kong is trying to do that. I know Tokio is trying to do that. So I think it's going to happen. The question is when and at what pace. The interesting thing that Seip mentioned earlier about is how does insurance distribution change over time? And the way we look at it is, and it's just natural attrition, right? So if you look at the average age of agents in Singapore, you look at the average age of agents in Hong Kong, I mean, they're all 40, 50 plus, right? And there's no turnover in terms of generation. So naturally it's going to happen. And there's nobody to really replace them. Because a lot of these agents, they have children and they don't want to be agents. So by force, insurance companies have to adapt, not by choice.
And we heard already some of the potential options, like bots in there. So how Are there any, and it doesn't have to be the regulator or government, can also be industry consortia or a group like InsurTech. What would be most needed, right? Is it more funding, like what Life Shredder is doing? Is it actually more sandboxes or less rules even? Or just give it time and it will happen? Actually, all the ingredients are already there. We just need to cook it. What are your thoughts on that?
I'll probably start. I'll go back to the first point that I think Sia just mentioned, collaboration. It is one of the key. Think about the low-hanging fruit, where if insurance company can just share data across, just talk about blockchains a lot. If you just think about, you can share data, underwriting or claims data across, we can just reap so much benefits from just sharing this data that we can gain much more insight into how claims are being made across industries in the region, how the customers behave in claims and how they behave in underwriting. All those, I think, are some of the low-hanging fruits that we can reap if insurance companies start collaborating and share data.
So that's a great maybe a vision for today, that if there are more collisions happening here, business cards being exchanged, and we end up with a new underwriting engine as an outcome of today, that would be a great vision.
I want to echo that. We're working with another insurance company in a partnership on blockchain, and that's happening today. But maybe a direct answer to your question is, what does the ecosystem need? It needs exits. And I don't mean IPOs. It literally needs people to get rich, building out companies that disrupt, collaborate with, and change the insurance industry. Because once we see exits, then we will have more activity. No matter what industry you're looking at, venture needs exits to create both serial entrepreneurs as well as the inflow of talent. It's still, no matter what you say, it's still very hard to attract people to come to the insurance sector, whether you're an InsurTech startup or not. And therefore, a few exits might get the ball rolling.
And it's an interesting point, because actually you see some of the VC, like the Ubers, moving to extreme high valuations and not thinking of exits in the short term, right? And getting enough money in the pre-exit stage still. Ryan, maybe if you have a wish for the ecosystem.
I think we can say collaboration, and at the business strategy level, I think it's there. But when we talk at the kind of API level, I think that needs to happen a bit more. A lot of the InsurTech companies right now are either kind of surface level, right, and kind of changing the experience, which is great, but still dependent on kind of historical backends. And we need to look at how do we support new evolutions of that without the capital reserve constraints and all of those things that are holding people back from really going end to end in building what is the next generation of a life insurance company, or how does it break apart? How does it really drive outside of the kind of property and casualty space, but actually into things like life insurance? And I think as it opens up, as APIs are more available, as we kind of split the industry into hundreds of thousands of APIs that can be pieced together, that's really when it will start to take off, and you'll have exits of pieces of that. I mean, if you look at just e-commerce and what has enabled that, now anyone can spin up an e-commerce site, and you've got a website as a service, and you've got a payment gateway as a service, and you have fulfillment as a service, and you can just pull it all together, and you're just a designer, and you've now launched a new e-commerce site for your designs. That's great. And so as we get to that point where there's more ingredients to pick from, and you're not having to build as much as an individual company, that will open it up quite a bit, and will lead towards those exits, as he was talking about.
And who do you see driving that? Is it you? Is it new startups that are providing APIs? Is it an industry consortium?
I think it's all of the above to some degree. I think we're trying to drive that, but there's also corporate factors we face up against. So the best thing that can help us drive it internally is to see a little bit more threats in that space, I think, because it forces people into action. And so I think it's easy to look at the other industries and start to see what's happening in payments and say, okay, it's coming. But you still have a lot of people in the company that maybe 5 or 10 years out from retirement that think that they they can coast out without facing this one. And I think it's coming a lot faster than anyone thinks.
Okay. Yes, DJ.
I think if we look at a lot of the industries where this sharing economy and the API ecosystem has developed, I think it's about a big change is instead of insurers putting their services and APIs out there to say, sell this product to that customer, I think what we need to be doing is putting our stuff out there, our assets, our data, whatever it is, our services, and then allow everybody in the room, all the smart, bright people doing startups and InsurTechs, to figure out how to use that to give some piece of value to somebody that they're targeting. So make the stuff available for people to create innovative business models from, and then the value for us will be not so much direct premium income anymore, but capturing a slice of the value that we can't even see today that other people are creating, and that becomes a scale game. I think that's a big change that the insurers are going to need to go through in the next couple of years.
Okay, like a commission on that part. Okay, I want to also open up the questions to the room if there are key questions. I see a hand there, sir. Please also state your name and where you're from, and then the question. Thanks.
My name is Zaman. I am a independent consultant. It's great to have all of you here and to listen to your views and all that stuff that your companies are thinking of doing or already doing. But there's some issues that I think which are very ground level that need to be addressed. And let me just share my experience in the last 3 months where I've had interaction with 3 different insurers, 2 of who are represented here. The first one, I got a policy statement. I consider myself halfway financially literate. I could understand a word of it. I don't know what the statement said. I don't know what it was trying to tell me. I don't know whether I was in the money, whether I was not in the money. I had no idea. Number 2, I was just trying to renew my car insurance. And just to figure out how it worked, I called up my existing insurer. And they gave me a quote. And I said, my car in the last 1 year has done only 5,000 kilometers. Does it make a difference? It doesn't. I called up a second one and I said, my car in the last 1 year has done, they gave me a quote and I said, it's done 35,000 kilometers. Does it make a difference? No. Nothing. Analytics, information, makes no difference. Third one, I go to premium renewal notice. I want to make a payment. You can pay by cash, you can pay by check. When I look at the front, I look at the back, there is no option to pay digitally. I can't go online and pay. And I forced my agent and all of that stuff, and I finally did pay digitally. And when we asked the company, why don't you write it? Why don't you put it up there? They have no way of digitally reconciling who paid what against which policy number. So, my point is that this is very important, all that you're talking about. But there are some issues on the ground that need to be fixed. And for that, you don't need startups. You don't need InsurTechs. We need some very basic things to happen. And we talk about customer being the key. I don't see the customer in any of these 3 interactions. So, how does one react to that? What are companies doing to deal with those kind of cases is what I want to ask.
Interesting. I think that the red thread is how do you make it for the customer instead of for the process or for the operations department and the things.
I'll take a shot. Clearly, it wasn't us, so I apologize for your.
That leaves
apologize for your
experience.
But I think it's very valuable point, and I think that's a little bit the elephant in the room. I think we all know a lot of those things are long overdue, and I think that's a lot of what us sitting here have to deal with on a daily basis. There's an enormous number of those kinds of things that need to be improved. I think the challenge a lot of us face is that there are a multitude of systems involved in that whole process. And those are actually not very straightforward changes. So I think something very simple about making a letter easier to understand, that's something which absolutely has to happen. I think we're definitely working on that, and a lot of the other insurers will be. So very simple, I think, user interface or letter changes to make things easier to understand. As soon as we start touching data or information, it does become more complex, because we have to understand where the information is coming from, trace it through the entire life cycle and make sure we're giving the correct information at some other point somewhere else. I think, the distance your car has traveled, absolutely, that should be the type of price point we're using, or a data point for pricing. But again, I think it depends a little bit on what has been built into those legacy systems, in the back-end systems. I think a lot of insurers, particularly who've got a big book, hundreds of different products, hundreds of different systems, there's really an overwhelming job there to try and simplify and standardize all of that stuff, get all of those systems down together, make all of these products compatible or look similar. So we absolutely understand the experience you've gone through. It is a priority for all of us. And it's an enormous job that we're working on in the left hand, while in the right hand we're trying to do all the cool InsurTech and sexy stuff as well.
Thanks. Maybe another question and
sorry.
one remark. I have also seen insurance companies actually on purpose not allowing digital payments because they want to have the agent interaction. So this is a way for them to force agent interaction. You can think about if that's good for the customer, but sometimes there are actually reasons why people make it harder for the customer. But here in the front. Yeah, sir in the green shirt.
Thanks.
Yeah.
My name's John Sullivan, the founder of Oolala. I'm one of those startup guys, but not your average 59-year-old insurance. I'm 59-year-old startup guy. So it's interesting.
Awesome.
When you talk about wanting to get exits, actually Zia was mentioning, and accelerators. I think there's one startup, Zaman, that actually got $1 billion in essentially startup funding and completely revolutionised delivery in China. I think they got about 3.6 billion in premium in their first year. And one of the things for a startup entrepreneur, we look at Lemonade now and we see, okay, $13 million and they've got something quite revolutionary. A lot of the thing that startup people do is you go around and knock on doors and see VCs and people, insurers, etc., and you sort of say, okay, the numbers you need to get the good runway and get something really revolutionary happening, it's not big numbers. In fact, the convener mentioned a bit earlier that millions of dollars are spent on advertising for insurance, and if you had just a few of those million, you'd completely revolutionise the space. And as DJ was saying, you could collaborate with people and really make and in that 3 years, you'd see something incredible happen. So, that's what I think. Actually, the scale of dollars that needs to be deployed is maybe at least an order of magnitude, maybe a couple of orders of magnitude less than now than what it needs to be. So rather than have a loft with someone getting 100,000 or $500,000, they need to have some serious numbers, and then you can make a huge.
And what's
huge
the
damage.
question? You're
it's
asking for the money, or
well, it is. It's actually an observation, and it's to say the question is how serious is like, for example, Singapore and the people in this space about really seeing that happen in 3 years and seeing a revolution that accelerates, InsurTech insurance.
Maybe that's a good question to end with. What's your view or hopes for InsurTech in 3 to 5 years? I mean, Zia, you told a bit like you hope to see here CEOs who have exited talking about their journey. But some thoughts on the future of InsurTech? Maybe let's say 3 years out.
If I can just respond to it was John, was it? To what John said. So I think John's question that he didn't state was that he's looking for more funding. But I think so where we are literally today, if I go and talk to the CMO about spending, however many figures on marketing and advertising to an existing customer base which is a very big existing customer base, and then let's put some money over here on this side for something new, which we think is the customer base of tomorrow. I think the intent is definitely there. It's about timing. I think we're not going to see those dollars move across until the numbers start being more comparable. So I think to answer your question, maybe 3 to 5 years from now, I think we're on the journey now where we're going to see the InsurTech platform and ecosystem develop. I think it's going to be growing very rapidly a couple of years from now. But if I look at the size of the established businesses, I don't think it's going to have overtaken the existing business in terms of volume 3 to 5 years from now. It's going to take a bit more time. So the growth is definitely going to be there. But if we get it going now, it's still going to take some years before you've got a let's say, volume comparison between old and new business. And it's just a question of timing. When somebody sees that needle start moving, that's the point at which they're going to say, now we need to start pushing money from advertising and marketing into the existing business to start spending money on here. The forward-thinking ones will see that earlier.
Thanks, DJ.
I think for me, it's going back to the fundamentals that the questions being asked by the gentleman just now. I think as much as we want to look forward to see growth in innovations in the insurance company like us participating more in more innovations, we advance in the way we serve the customers. We need to also look at our backyard, right? It's a good reminder to us that while we are progressing, we look at what are the current issues that we need to first fundamentally address. Like, if we are not able to even issue a policy that the customers can easily understand, those are fundamental problems that we need to continue to address while we move forward to embrace the innovation. So it's probably what I'd like to see.
Yeah. Alex?
No, but just on that point, I mean, it's a vicious circle, because if you have the same people trying to update policy statements or disclosures, I mean, it's going to go round and round. And, we face that issue with Aviva. I mean, so we brought in different kinds of people. So just one example is we brought in a guy that invented Call of Duty, the game, a very popular game. So he's now our chief designer for the Aviva Digital Garage. Knows nothing about insurance, but knows a lot about user experience and knows how to navigate customers through that experience, which people in our company knows nothing about. So he's really changed that for Aviva and really simplified that navigation experience. So, I mean, to your point, it's slow, but it's happening. And if you're doing nothing at 11, come over and I'll sell you some policies that are more easy to understand.
Wow. Ryan and Zia, any closing thoughts or remarks? Maybe Ryan first.
Sure. I mean, I guess if we look at 3 to 5 years out, I would hope there's products out there that are addressing today's customer needs in ways we couldn't even imagine. Right? That it's not just a digital veneer on a product. It's not just a different way of bundling today's products, but that we've opened up in a way that people, to DJ's point, have created things that we couldn't foresee here, but it's done in a way that allows it to be scalable. Right? That it's not just pocketed. There's a lot of people that need these services, and these provide a great bit of stability for people in their finances and the way that they think about providing for their family. And so to bring it back to that customer, it's about the scale side of it too. And so hopefully internally we can move the needle, right? Because we get the same question from the GMs every day, right? Is how could we possibly think about doing something with deep learning when we can't get a claims online? But it's a question of it's not one or the other. We've got to figure out ways as companies to do both. Okay. So I think that's the biggest thing over the next few years.
So in 3 to 5 years, we have a transfer-wise of insurance, hopefully from somebody here in the room. Maybe Zia, that's closing thoughts.
Thanks. To build on that, the personal reason why I chose to get into life insurance is not about putting a new veneer on digital, not about solving the existing problems with user experience. I think 10 years from now, we're going to find that we're in a completely different industry where the job to be done is not what if. The job to be done is so how. Life insurance is not about financial services, it's about health. And in 10 years from now, Just like Metromile and others are thinking about usage-based insurance for your car, I think we will all be talking about usage-based life insurance. Every single little piece of data that we have and we publish and we create about ourselves and our environment will help us better understand risk. And more important than pooling it and managing it is about sublimating it. And therefore the future, and the reason I'm interested in life insurance in the long run, is that it will be something that enhances and betters everyone's life. And it goes from what if to so how.
Thank you for this thought-provoking vision, and that's all the time we have for this. So thank you again to all the speakers, and thank you for the questions also.